All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is the Palantir Q4 2024. Sorry, not Q4, Q3 2024 earnings preview. And we got a lot to talk about, a lot to dive into. Arnie will be here in just a bit. But it's the final day before Q3's earnings. And I don't even know what to feel. There's a lot of emotions, a lot of excitement, a lot of energy. But let's start off and just go with the raw reactions. Amir, what are you just feeling before we get into earnings?
You know, I'm kind of really hyped, but also kind of worried. And it all comes back to one specific metric that we will get into in just a moment. But, you know, it's that usual mix of looking forward to something, but also like, do I have this wrong? Am I right on this? So, yeah, it's kind of a mixed feeling.
All right, Mr. Matt Money, what are your raw emotions or jitters going into earnings?
I'm just going to say it, man. I'm going to rip the Band-Aid off. Hope this motherfucker goes down so I can buy some more goddamn stock. That's what I hope. You know, and I know a lot of people out there are probably going to be very angry. They're going to be like, oh my God, Matt, how can you wish? Dude, I only have 4,500 shares. You know, in retrospect, when this thing got to $40, $45,
you're probably feeling low. Yeah.
I was like, I am underweight on this, and I need to buy at least double what I have. So I can only wish. But do I think it's going to pull back to like $20? Absolutely not. Like, I think this thing has so much good momentum. I think this, if anything, will be a hiccup in the road. But we'll wait to see what the earnings results kind of come out as. But I think there's just a lot of good material coming out from a marketing perspective. You had a great interview with Sham yesterday, Amit, and just a lot of great things that we still have a lot of details to hear about. And so I hope to hear a little bit more about that in the earnings call, just as like company performance perspective. And then of course the financial perspective will be interesting. I would really love to hear any inklings as to what they're guiding for, maybe for fiscal year 25. I don't know if they're going to give it, but it would be nice to hear at least some sort of inkling as to where they think things might be headed, because obviously that would have a big impact on the stock price likely.
Where did you get a Palantir beanie from?
Don't ask questions you don't want the answers
where
to.
did this? I don't have this merch. I need to talk to Ileana. Where are you getting this stuff from?
I think me and Hot Roy got one. I think.
Oh, he gave it to you guys. Oh, okay.
Yeah, Ileana gave.
I got 3 beanies, one for each family member. It's crazy.
Dude, I need a beanie. I love beanies. I need to get one of these beanies, especially going into.
You get an interview with Sham. I get a beanie. You know.
That's fair. That's fair. Okay, so Arnie will be joining in a second. He woke up late because it's like daylight savings time in Europe or something like that. So he'll be on in a bit. But I guess we'll get started before we. Amir has a bunch of charts and we'll get into a bunch of stuff. But I guess let's do a high level discussion on the metrics we care about before getting into the nitty gritty. I think let's each pick one or two metrics that we really care about, and then we'll go from there. I'll start off first. I'll be really quick. I think my metric is top line growth, and maybe that's a cop out, but I think top line growth is going to be the most important metric, whether that's 30, 35, 40%. Adjusted operating margins, I think we'll get closer to 40%. We're not going to have any debt. I think we're going to be on track for $1 billion of free cash flow, at least 850 to 900 million, what they guided for. But that top line growth metric is everything. And I think the stock goes up or down based on that number. So I think that's going to be the most important thing for me. Matt, what is your most important metric as we bring on Arnie to the show?
Arnaldo, Good morning, man.
Good morning. It was a tough wake up.
Arnie, we'll let you get situated before we get to you. Matt, go ahead.
Top line, I would agree, man. I think if that comes in very shallow and doesn't have a 3 in front of it, I think that's going to send the stock way lower, which to me, I don't think that's a failure, right? I think even if you get high 20% or even 30% on the dot or even low 30s, that's extremely beneficial because it's a continuation of a solid quarter over quarter, year over year increase in revenue. And it gets you back at least and shows the naysayers from 2022, 2023 that said this thing will never hit 30% again. It kind of shuts them up.
So you agree with me that the main metric is top line growth. That is
100%.
The big thing. Okay. Amir, what is your core metric you're looking at?
Similarly, but more looking at the revenue build. So for me, the most important thing to look at this quarter and the coming one is net dollar retention, for the sole reason that we went into about a year and a half ago now is when AIP launched, and supposedly there was no pricing strategy. It was just about taking the whole market. Net dollar retention tracks the revenue increase from customers that have been customers for longer than 12 months. So we should start to see net dollar retention start to increase, which in turn should result in more revenue. But now, I mean, there isn't really the same need to offer AIP for more or less free the way it was a year and a half ago, because now AIP is relatively proven. I mean, we have wide adoption and it's spreading like wildfire. I mean, I think it's time to start cashing in on those initial AIP customers. So I think we should begin to see net dollar retention increase a lot. And in turn, that should also give us that higher revenue growth that we've been yearning for.
Okay, Arnie, the question is, what is the one metric, before we get into the nitty gritty, that you are focused on? And then also, what are your raw emotions and feelings going into earnings?
Mm-hmm. First, do you hear me well?
Yep, you're good.
Okay, perfect. Well, I think both are extremely connected. Obviously, you can't really have like a very strong revenue growth if your net dollar retention sucks, because revenue growth is supported by the net dollar retention. And since it is already more than 1 year that boot camps are in play, theoretically, at this point, we should start seeing the net dollar retention increasing well above the 110%, which more or less was like the levels that we stabilized. It increased to 114% last time. I personally expect to see like 117 or so. If it stayed the same, I would be a bit disappointed. But I think I would distinguish what's the most important thing for investors, what's the most important thing for the market / traders, because now the stock is so high, like all the focus will be like, oh, but is the growth keep accelerating? And each sign that potentially could put some dubs on the sustainability of that growth could trigger the market into, oh, no, this company has already reached its peak. I mean, I think of Robin, like the quarter that we covered was actually a good quarter.
You don't have to remind us about that one.
Sorry for the pain.
No, but you're right. I mean, Robinhood's a good analogy, right? It was up 130% going into the print. Everyone was excited. Amazing numbers, just not enough. Down 20%.
Yeah. So those are the numbers. Just as a reference, like those are the numbers that if the stock was like $20 before going to the print, the stock would have popped. But those numbers almost at 30 made people skeptical. I was like, oh, no. Like it is priced too perfectly. I need to be ensured that I don't get 35% growth. I want a 40. In the case of Palantir, let's say the growth will be of a quarter will be like 26, so just 1% above the guidance. That would make people, oh, no, 26% for like 40 EV sales. That's insanity. Let's dump the stock. And then there's the point of the investor. What we really care as an investor is our thesis intact? If we get a lot of customers, we get the customers expanding, we have like very strong use cases that the management shows as last time, where customers can get on board fast and these clients then expand a lot. That would be like the confirmation of the thesis, and any potential swing in any direction would be just a short-term noise.
Okay, so let's ask this question. I want to ask this question, and then we'll get into all the specifics on the numbers. And I think this question is very important. Obviously this week Robin is another one of my big holdings, and it's one of those things where this is why it's so hard to win in the market. You expect one thing to happen, the other thing happens, and greats that do it year after year, that's why they're respected, because it's very difficult. Here's the question. I'm going to put this in the chat as well. Here's a poll. Are we mentally prepared as a community for Palantir to go back to $30? 35, 32, whatever. Because let's say they put up really good growth, like Robinhood did, 36%. But the street's just like, or the expectations, whatever, right? Whatever idiosyncratic reason they come up with. And then, I mean, I saw a 20% red candle, and you're looking at that like, oh yeah, things can go down, right? And for Palantir, we have not had that experience for the better part of at least 2 months since S&P inclusion. Are we ready? I want to know what the chat thinks and what you guys think. We'll start off with you, Amir, on seeing a stock go down aggressively, even if we have good results.
I mean, can you share what I'm, because it kind of sets the premise, right? So these are the pricing multiples that we're going into the Q3 earnings with, like 245 price to sales, 40 price to sales, 245 price to earnings. So, I mean, it's really lofty there. So anything, as you mentioned, anything but something really extraordinary should probably pull the stock price down. And, you know, this community has been through some stuff. I absolutely believe that this community is ready for a $30 dip. Come on, man. I thought you were going to say like 20 or something, like cut the stock price in half. 30? Come on, man. I mean, this community is more or less hardened. We've been down to the trenches like $5-6, and you know, the company at this stage is completely different. I'm way more confident in Palantir today than I was when it was at 6, even though it was much better valued. I mean, it was much more attractive as an investment at $6, but I mean, the company is just much more robust today. So I'm more confident in the business prospect today, and I think most of the community would agree. So yeah, $30, yeah, absolutely ready. I don't think it's gonna phase anyone or scare anyone out of the stock to see that.
Matt, are you ready for it? But also, do you think the community is ready for it? Just given what you've seen about people buying the stock in the high 40s, are they ready for a dip to 30?
Well, I hope they're buying in the 40s for the hope that you know, they're looking long term like I am. I don't think the community is personally ready for it. I think there's a select few. You know, there might be 15, 20, maybe up to 30% of the community that would be okay to stomach it. I still think that there's a lot of newer folks that have entered, and I hope that, you know, this would hopefully be a lesson for them to understand, you know, what is the conviction. If and let me put some context around this before everyone thinks Matt's a perma bear, right? I don't want you to put me in the same league as Mr. Patel, as much as I love him.
No one can ever be in the same league. That is a special league of his own.
That's a league of his own, you know. But what I will say, if I was in this to sell it at $50, I wouldn't have this opinion. I'm not here to sell this at $50. I'm here to sell this when it gets to half a $1 trillion market cap, $1 trillion market cap. So I think we're very far away. Plenty of buybacks between now and then. Plenty of volatility between now and then, ups, downs, sideways. And so for me, you know, I can never predict what the stock price will be. And I think somebody said in the chat perfectly, as long as the company is heading in the right direction, and as long as I still feel comfortable overall with where I think the company is performing and what products are coming out with, the culture still remains the same. I don't care if the stock goes down to $30, $20, right? I'm not selling this at 50, right? So to me, you know, I've had people reach out to me. Have I sold any shares? No, I haven't sold any shares. But do I think it's overvalued here? Yeah. So I'm prepared for it to go down. I'm actually hoping it does, so I can buy more. And I hope that other folks or if they love it here at 45 and they're buying at 45, I really hope if it goes down 20, 30% over the next couple of weeks that they continue that enthusiasm and continue to buy and show support.
Can you do a poll? Who's actually buying in the 45s? I'm really curious. I don't think any one of us in this call has bought recently, right?
No. Well, put in the chat. So first of all, we have 71 to 29%. Are you prepared for it going back 30 if it happens? So it seems like at least a decent amount of you are like, okay, if it happens, we're ready to deal with it. Put in the chat if you've been buying at 40. I haven't. Amir, I don't think you have. Arnie, I think Matt hasn't either. So yeah, put in the chat if you have. Arnie, are you ready for it if it goes back to 30? You are all in on Palantir. It would be a big hit to your portfolio. How would you mentally deal with that?
Like those are the situations where when you start to think of it ideally, you say, oh, at 30, yeah, I would love to add. Yeah, sure. But then when, as you see, like minus 5%, it's like, maybe situations change a little bit, especially when you are overexposed. And I think that's the keyword. if you are overexposed, then you would become like very sensitive, because maybe you are overexposed compared with like the portfolio size, compared with what you are mentally ready, prepared to digest. And I personally saw some people even going on leverage like already these days. And for me, like that's a dangerous territory. Like I would never ever consider, well, I don't do leverage, but I would never ever consider going leverage when the price is already like that.
Yeah.
So I personally would support that, I think, if we go back to 30, but just because I'm mentally prepared, also in terms of portfolio and cash aside, that if something very bad happened for the stock, not the business, I'm in a good position to increase my buffer again.
Right.
If it doesn't, still fine. If the thesis breaks for whatever reason, then what you do is just another valuation. In terms of community, I think the old guys like us are more mentally prepared, but despite they would be like, that would be painful to see.
Yeah, because we've all gone through, I think, 10 quarters of crappy earnings in regards to stock price. It's only been the past 2 months really that we've seen this explosion.
I mean, from 30 to 35 is like a 30% drop. It's like,
yeah.
I mean, we have been through that actually multiple times. But all the people that joined the stock while it was having a positive momentum and only saw that, like even like a -7, -10% can makes you fear out. Imagine like at the beginning of August, it was more or less that situation. People were not used to boom.
Yeah, and during the Robinhood call, you were there in the chat, Arnie. You saw Palantir fell 2% after hours. Is like 42.50, and everyone in the chat was like, "What's going on with Palantir?"
Why Palantir down?
Yeah, and I'm like, "What? Yeah, down 2%. 2% is 2%, but it's like it's 2%. Like, what? Like, are we ready for 20%, dude? Like, because it happens. It could indeed happen. You know."
Well, that really tells you about the sensitivity that people can have. If like a -2%, which is like literally absolutely routine for a stock with such a high beta, imagine like seriously a -15, -20.
Yeah.
Which could happen, by the way. We don't know.
All right, so let's get into the numbers. Amir, you've got a lot of stuff. You'll lead us off with your charts, but yeah, we can start.
Just to tie into what we just looked at with the pricing metrics here, I also did a quick reverse DCF just so we see like Palantir is currently at $42, more or less. That implies that the company has to grow at 37% CAGR for the next 10 years at 30% free cash flow margin. So, I mean, the expectations implied in the stock price valuation-wise are pretty lofty. And I also charted it up against the Wall Street consensus. And by 2033, we are like 326% above Wall Street consensus if we grow at this rate. So
so Amir, this is a big question because you're saying in your DCF model we have to do 37% growth. Wall Street is not estimating Palantir next quarter is going to do 37% growth. So let's say they do 29%, 30%. Do you think the street would be mad if they're already not?
No. They aren't valuing the company at all. They are pricing it. They just assign a multiple to their projections. This is just valuation-wise, like what would Palantir have to do to justify today's price from a valuation perspective? What Wall Street does typically is that they will have their projections, and then like we've seen the knives do, they assign a multiple that like suits their narrative. They just like play with the numbers.
But here's my question. Palantir's got it for $703 million of revenue. I think they're getting closer to 750, 730 maybe. If they bring up 725 and Wall Street's expectations are also 703, right? What the company said, that's a beat. But the stock is run like crazy. So the question for you guys is, if we beat, does it have to be such a significant proportion of a beat for the street to not tank the stock, even if they're not projecting 37%? Matt, any thoughts on that?
I think there's two. In order for them to consider it a beat, meaning the stock doesn't tank, right? I mean, there's an actual beat where they say the 703 they beat that, but in terms of like actually meaning the stock goes up, I think there could be a case where they come in at 725 or below, which is 30% year over year. Let's get everyone's head in that number. They would have to show significant or have rhetoric around significant increases going forward, right?
Mhm.
So they could say, look, we were at 27 last quarter, year over year. We're at 30% this quarter, year over year. We're just starting to implement AIP monetization, etc. Expect this acceleration to continue. Then I think that they might be okay with 725. But to me, I think they really need to get to that 750 number, like you said, which is closer to 35% year over year before they would actually consider beat. So like you said, I mean, we've seen multiple times this quarter, people have beat and they beat rather well and they still get punished because I think the stocks on some cases have run up really well, Hood being one of them, right? And so this is in the same boat, right? Keep in mind, before we entered Q2 earnings just like 90 days ago, the stock was trading at like $24 and we're pretty much about 80% north of that at this point. So there's going to need to be some serious rhetoric for that to even make any sense. But I personally think 725 is where we'll land.
I mean, we do know Wall Street consensus projections, and they are more or less like 20% the coming 2 years. So I mean, there's a big mismatch between Wall Street projections and their price targets and how they actually react to the stocks. You have like all these different aspects to
consider.
To consider. So I don't know. I think it's more about the optics, right? Like just getting over that 30% revenue growth threshold. I think it's more like, what does it look like on the surface level? I don't think it's too deep that they expect like specific numbers or like have to hit some like 31% instead of 32. I mean, I don't think it's that granular. I just think it has to look good, right? And growing at 30%, it would look good because the underlying stuff will look even greater. For example, they will highlight US commercial that we know will like put up some great year-over-year growth rates, which they like if we take Q4 for example, where we had this 70% year-over-year growth, like actual revenue growth was 19%.
Yeah.
But I mean, everyone was talking about the 70%. So they will just tie the narrative to what looks good optically, right? So I believe 30% would be enough, more or less. Yeah, that one. Like the analyst estimates are like super detached from both reality and their price targets, I believe.
Yeah. All right, so let's get then deeper into the numbers. What is this first chart we're looking at, Amir?
Yeah, so I thought it would be fun if we can reach some sort of consensus during this weekly among us ourselves, and then we can compare on Monday, see where we're at. So I have the guidance here for revenue growth. I've taken the most basic stuff, and we can just do the projection together. So 726 million would mean 30.1% year-over-year growth. 725, as we talked about, it's kind of 30. It's 29.9. But yeah, I think
we can round up. We can round.
Yeah. I think the baseline should be something like 725, which is roughly 25 million above the guidance, which is 701, like the high end of the guidance. But I'm curious what you guys think. I don't think we're gonna do much better than 30% year over year. To be honest, we haven't seen, as I talked about when we talk about net dollar retention, we haven't seen AIP monetization really go into effect yet. And until we get some sort of hints that they're really starting to scale up those customers, I don't think we're gonna do much better than 30% personally. So I would probably estimate something like 726.
Arnie, the revenue growth top line, your projection?
So 726 dot nothing, or are you going to be as precise as the company with 726 comma 0.2?
No.
Yeah, we got to get out of the 100,000s. Yeah,
we're rounding it.
Dude, the merch store revenue is gonna get us to 30%.
Yeah, but merch store.
It's gonna do it.
Let's get it.
So we will see the slide like the revenue X merch store the revenue after merch.
Imagine there's a slide just for like the hats that are. That'd be the best thing ever. I mean, literally the best.
That would make my day.
I mean, they did add it to the actual Palantir site now, finally. So maybe,
Yeah.
never know.
I think we're coming in at 30%. I don't think we see
Yeah.
below a 3 on that top line number. Arnie?
I would be inclined to think we are getting closer to 30%. Maybe like not 30%, like cool number. Like let's
You
have
think it'll be 28 or 29?
like to get to 30%, it must be like 730,
No, 726 basically.
26.
I just
Comma?
shared it.
Comma or not comma?
No comma, no comma.
I don't understand the commas. I'm just kidding.
Yeah, Europe
No-
has
no
some-
comma.
Sorry, the dot. The dot.
You guys have
I'm just
no
kidding. I'm just
innovation
kidding.
other than replacing a dot
No
with a comma.
decimal,
Like,
okay?
ridiculous.
Like, yeah. So if you share my screen again, Amit,
The only commas I care about is the
if
third
we
comma.
do 725, Arnie, then we get 29.9. If we do 726, it's 30.1. So it would be something like 25.5 to get that exact 30. But since we're not doing that, 26, no decimal. 726, no decimal.
Arnie,
Okay.
do you think we're hitting 30% growth? That's the question.
This quarter, no. I think we get to 30%, 30 plus in Q4. But
Okay.
but just because I don't expect like a solid like a sudden boom. But I think it's worth noticing like what happened this quarter. Now it became like seriously a habit every every quarter that I shared. What are the deals that happened during the quarter? And like this quarter, we didn't have like very big deals in terms of disclosed dollar amounts. Like if you remember last time we had like Maven, we have some other like big
Titan.
stuff.
Yeah.
But this quarter, like if we look at it like very, very simple, we have like, okay, another expansion for Maven. Then we got some army contract, another army contract. So you see, oh, maybe the government side is actually pushed, and we know that how much the government side is really important. Then on the commercial side, we see Sompo, which is already a huge client, further expanding. Remember last year at APCon, or it was a FoundryCon, when Sompo disclosed like an expansion. Now we have like a further expansion. So we have like further expansion of already a big client. The same for BP, already huge client, 5-year expansion. Then we have like Wendy, huge client. Apache, already a big client. So we have like a lot of stuff going on, which I think that will be like the real focus on the earnings. Like the number of the percentage revenue growth is truly important, yes. But what really matters for the street is are the AI cases that you proclaim real? Because everybody
But
now.
Arnie, I would disagree there.
Really?
If the
Yeah.
AI cases are real, we would see it in the growth. The street doesn't give a shit about Nebraska medicine, right? Like we need to put up we are trading at 105 times free cash flow. If we don't put up the numbers, I don't know how the street.
No. But look, like now
136 times.
let's make one step back. Like, what's the equity story right now with Palantir? It's not that this quarter it needs to be like 30%, maybe like for the stock, but like the narrative is this company is accelerating, and we are at the point where we don't really know how long this acceleration can.
No, but
can
that's
last.
no, but we are only 1 quarter into acceleration. They guided 22% last time. We came in at 27. We beat by 5%. That's a significant beat.
And
they're
they've
guiding
guided
for
25
25
now.
Yeah, now they're
So-
guiding for 25. That's kind of why I'm saying 30. Just add 5% like they did last time.
So in their eyes, like from the eyes of a company, like already at 27, 28%, that would be like, okay, like this is a clear sign we're accelerating. Maybe for a market, that would be a disappointment.
Yeah, I see your point. It's still reaccelerating at 28%. Yeah,
But I think like the core story that matters for people to keep holding the stock is, okay, is this acceleration growth story actually a sustainable story? Because if that is the case, or there are signs that this acceleration is likely to increase, then even if like the numbers are not like perfect, but there are like some good signs, okay, the future will be bright. Let's say the revenue growth is just okay, just a little bit above the guidance, but there are like a net remaining performance obligations that are exploding, meaning that the company shows that there is like a backlog of revenues that will boost the future quarters.
Yeah, if the guidance is there, yeah.
It's like the only pity maybe that could disappoint the street is at this point they're maybe not giving the guidance for the year, just for the next quarter, waiting to deliver like the yearly guidance of the next quarter when they make a Q4. So that is the very, very big question, more than, okay, what's the revenue growth for this year? Because all the now Palantir is not priced for the present, it's priced for the future. And the guidance of 2025 is really what makes then the stock potentially too expensive or maybe insanely cheap if in 2025 then we hit like 35% growth.
Right. Before we move on to that next metric, Matt, your thoughts on what you think top line revenue growth will be?
No, I'm very aligned with Arnaldo. I think it's 30% or below personally. My hope is that it's a stepping stone in the right direction. They guide for a little bit, and I agree with Amir. I think maybe we'll start to see 30% tags or mid 30s maybe next year. Fingers crossed. But yeah, I think honestly it'll be difficult. I mean, to be 30%. One of my numbers are here. You need 7% quarter over quarter growth. That's a lot. So you're already starting to get pretty large when it comes to quarterly revenue. So yeah, I mean that's a pretty expansive movement. It's almost a movement of what I guess the number is $46 million increase quarter over quarter, which is pretty expansive, right? So I don't know. I'm saying 30% or below year over year.
So just for reference, if you quickly share the screen again, and as we move into the next chart, I just looked at the Capital IQ from S&P Global. So the consensus estimates are 703, which would be 25.9%, like 26% essentially. So that's what the street is expecting. I don't think they'll be satisfied with that.
Yeah, if we come in at 705, I don't know if the street's gonna like that.
Yeah, what do you think's gonna happen?
I think Robinhood 2.0 in my screen is gonna happen. We're like, oh boy, that's great.
Well, I didn't think Robinhood was that bad. I mean, what was it, 10, 15%?
No, it was great, but there was a disconnect between analysts and what the company put up. With Palantir, as Amir is showing, there's no disconnect. The street's expecting 703. So 705 wouldn't be good, but at least if Palantir does 720, the street can't be like, oh, we were expecting 750. Then, that's ridiculous, which is kind of what happened to Robinhood. But
I would underscore one thing that I think it is important, but we are not focusing on. Like right now, we are all looking at the revenue growth because that's like the top line number that everybody looks at it. But what about the margin profile? Because
we will get there. Relax.
Yeah, you gotta let Amir work his magic, bro.
What the hell? You wanna look at one chart and get to everything, Arnie? Come on, man.
I like it all.
All right, what's the next?
There is something very crazy. Like usually, so Palantir's estimates for the revenue growth, it's like really conservative. We would say, especially if we look at the past quarter, so 25.6%, which would be like a slowdown. But there is one metric that they have guided so absurdly high that I don't know how they're even gonna meet. So I'll be curious to hear your thoughts when we get there. Just quickly, we don't have to get stuck here, and this looks like a mess, but essentially, the blue line here is commercial year-over-year growth, and then we have the government being the purple line. I just want to get your guys' thoughts on the percentage of revenue, like the split, because I'm just gonna quickly show you here. I'm gonna zoom in, and I want you to look at the percentage of total of government and the percentage of total of commercial. So as of Q2, commercial grew more than government grew more than commercial. Do you guys, especially now that Arnie shared like all the contracts that we've been getting, a lot of them are government based. What do you
Wait, so
think
how
the
much
revenue split is
of
gonna
out
be?
of 100 is government revenue as of Q3?
So 55 now, but it was 53 the past 2 quarters, and it's been like trickling down from like 60 to 55, 58, but now it's at 55. So I'm just curious, what do you think the mix will be? Because I think that government might still outgrow commercial for this quarter, but I've put them down like slightly, like at 54% instead of 55. But we don't have to get stuck on this chart. I'm just curious what you guys believe like the split will be, because top line revenue growth is one thing, but how do you think like the composition of that will be? Because if we just look at the PR announcements,
More
it's
government.
yeah, exactly. So
So I
what
just
are your
want
guys'
to
thoughts?
ask a clarifying question. So when you're saying what do you think is going to happen, do you mean is the split going to continue to be, I guess, progressing more towards government, or are you asking what year-over-year revenue growth would look like?
No,
the split
between
between
the
government and
split,
commercial.
yeah, the split.
So it was 60-40 like a year ago. Now it's 55-45. This is a hard one. I don't know, dude. I really, because all the PRs have been government. You're right. At least the big number.
And if we listen to Dan Ives, I mean, we obviously know it because we've been talking about it. We know that government is really slept on, and we know when that DoD budget increases their spending towards AI, we know that Palantir has roughly 25% of that market share of the DoD AI spend. So it's gonna go straight to Palantir. So most of us believe that government is gonna be really strong, like the coming 10 years. But the street doesn't seem to get that. So if we can showcase some robust government growth, I think the outlook for Palantir among many analysts beyond Dan Ives might be a lot rosier than it is today.
I think it'll still be 55-45. I kind of agree with you. Arnie, any composition, or Matt, any composition thoughts on this? No.
Well,
Not from
if
me.
the commercial side keeps growing faster than the government side, that composition gradually shifts toward the commercial. I think what's fascinating is now that Palantir is like a perfectly calibrated machine, where like there are like very, very few specific risks.
Yeah.
Which means there is a technology risk, in the sense that, let's say a cyber attack hits the company, that would be a mess, but it is not a mess like the single client, the single sector, because right now we have like so many clients, so many good clients in essentially all the sectors, that regardless of how
Internationally, yeah.
stuff happens, Europe, US, government, non-government, whatever side of the commercial world, like Palantir
Also,
as a solution for that.
there's nothing wrong with government revenue, right? Like I know the street maybe wants to see a little bit more commercial growth as well, but this is when Arnie and I got to talk to Mariana. She said the reason all these other guys on the street don't get it because they only think about tech. They don't think about defense. And that's why Mariana has understood the story before everybody else, because when you put two together, it's a hell of a moat that really can't be taken down.
I think at the beginning, having this government side was seen like a drag. Oh, yeah, who cares of government? The government side is worth a little. But now there is so much money from VCs throwing into defense spending. Unreal contributed to make it cooler. Like defense tech is now cool again. Well, it has never.
It's very cool. It's $50 billion invested into defense tech this year.
So when people like analysts were saying, "Oh, the government side are not worth that much," when people don't really care of it.
Yeah.
Now, when they start saying, "Oh, but there is also actual growth," hey, wait a second, like if Palantir is actually successful into convincing the government and all the players involved that we need to reform like the American base so that we are ready for a potential conflicts, then oh, this stuff is actually valuable. Hey, wait a second, like all the stuff that they develop for the army can be transferred to the commercial side. What they build for the commercial side can also empower the government side. And hey, wait a second, there's only Palantir having this perfect balance between the two components. So it's all, when the growth arrives, then the narrative shifts. And I think at this point, also the government side is ready to shine.
Yep. All right, Amir, we can move on.
Yeah. So the next one, I think it's important for us to discuss a bit is what are we expecting for the net customer additions for the quarter? Now, I'll be honest and say it. I was really disappointed in Q2. We started to see some real acceleration in the addition of customers. Roughly around Q2, Q3 is when AIP Bootcamp started to ramp, and it was really reflected in how many customers we were getting each quarter. So it's like had been stagnant around 30 to 40 for like two and a half years, and then suddenly 44, 57, and I really believe that we would get something like 60 if you recall this conversation just a quarter prior, but then we got to 39, and that was sort of disappointing to me. But I'm expecting that to continue because the dynamic here is that there should be a correlation between how many boot camps you are running that quarter and how many customers you are acquiring. I mean, it should be some correlation at least. And we didn't get that because we know that for Q2, they ran roughly double the amount of boot camps that they ran in Q1. Which doubled the quarter prior. So I was really surprised by 39. So I'm expecting us to accelerate again, maybe not to that Q1 degree, but at least 50 is what I'm expecting, which would mean 42% year over year and 8.4% quarter over quarter. But that's like my base case. Like ideally, I would see something like 55, 60, but at least an acceleration is needed, in my opinion, because I don't know what happened last quarter, and we didn't really get commentary regarding it as well. Maybe if there were some analysts on the call, they could have asked that, but
that'll be the last question. What analysts do we think will be there? Okay, so Matt, what do you think of customer count? Do we add it above 50 customers?
Do we add above 50? Let me see here.
It's an interesting one. I feel like we should, dude. Like
there is some disconnect between like the correlation of amount of boot camps and the acquired. We don't know conversion rates. We don't know, like maybe there's a pull forward from prior. Like we don't know really how it works out. We know it's not like they attend a boot camp and become customers the same day. Like there is some lead times to this, but still, I mean, if you run double the amount of boot camps in Q2 compared to Q1, I was at least expecting to stay in line with Q1 customer acquisition and not slow down to such a degree. I mean, we went from 12% year over year to 7%. So, I mean, I don't know.
50 is a lot, and we're starting to continually get up there. So if you only do 40, it's 6.7. So if you do 45, it ends up being like mid sevens. So you end up rounding up to about 8%. But if you do 50, you get closer to like 8.3, is it? Is that what it was? 8.4.
Q1 was 11.5% growth.
Yeah.
So it would be a deacceleration again. Hey, maybe the reason it was higher, Amir, in one of the quarters is because we upsold previous clients to AIP that quarter instead of getting new ones. No, these are new customer count. Yeah, this is new.
New customers. But keep in mind that if we're talking 40, like we are talking like a year before AIP was even a thing, like when no one even knew about Palantir, more or less, like in 21, 22. Like now they're in the public eye, they're front and center. People know about Palantir, people attend boot camp. So still like 40, okay, it's one more than the previous quarter, but I mean, that's in line with what we had in 21-22. I would be really disappointed by that. I would expect to see some sort of AIP effects, and that's why my baseline is around 50. Like, if I just think about it logically, you know.
I agree, because also, you know, Carp, all these guys are talking about the insatiable demand they have for digital transformation inside of these enterprises. That should lead to more conversions. Arnie, any thoughts on this? Or Matt, finish your thought. And then
Well, yeah, I was just going to say I'm going to stick with 45. I think that means year over year stays exactly flat at about 41% year over year growth. So I don't know. I'll probably end up being the middleman, right? Amir might be a little bit high, and I don't know. Arnie, what do you think?
Look, honestly, I was also surprised and a bit disappointed by the number of new customers acquired in last quarter, because as we can see from here, despite on the revenue side there is a clear before AAP, after AAP in terms of revenue growth. In terms of like customer count and customers growth, we don't really see that, and there are like two situations that come to my mind. Maybe there are more, but it's like, okay, maybe there is some motion that is not as good as we think it was, or maybe they are still running a lot of customers for free, or not like really classified as customers yet. And I'm thinking of this situation more thanks to a couple of comments I received on a post I made last week. I was commenting with a nice comment from Reddit, essentially disclosing, look, I work for Salesforce, but this new agent force, which is supposed to be like the platform to manage a lot of AI agents, can't get close to Foundry AAP operationally. And I received this comment. I was talking with Salesforce business development today. They will not let me try Einstein or Agentforce without a commitment up front to buy licenses. Should the trial show the value? I hope it might.
wow, I didn't know that. Wow.
And that triggered my thinking into what Carp said time ago. Oh, when you sell promises, you want to be paid upfront. When you deliver value, you can still wait. And oh, wait a second, like what happens if many people are into that phase where you can wait? And then the same guy, Cybernetic Papacy, wrote, oh, meanwhile, we are in month 5 of having Foundry and AAP post-book camp, but pre-sale. It's like, what are you really meaning with that? It's like you're monetizing, but you don't really have like the full contract. How you are how are you approaching that as as Palantir, as investor? Like, is this considered a customers or not? We don't really understand that. But this comment made me think that essentially there could be like a big number where we are not getting, like, we are delivering value, we are setting the base for huge potential contracts, but they are not entering the number yet. So I'm looking for a comment right now.
While you're finding that, I would agree with you. This is one of my most favorite things that Carp says, is like, when you don't have something valuable, you want to get paid before you give it, right? It's like every business. That's how there's a reason free trials are free, because they believe their product is so good that they'll keep you after they give you a free couple months. And if you can't give someone a free trial and you only need money, then it's probably because you're not that good.
Yeah, thanks to Rick that asked the direct question. Okay, but what do you mean with pre-sale? And this guy answered, well, we haven't made an official purchase yet. We are working on the business use cases to justify right now.
And he's in month 5, which is incredible, right?
Month 5. So imagine like how many potential customers in month 5 after bootcamp there are, that Carp says, oh, you know what? We are so confident we are taking the market that we are not rushing into monetizing everything.
This we talked about this a while ago. If the street tanks at 30% because they don't like that Carp says, hey, we're letting them take their time, we'll get them eventually, that's when we should buy the fucking dip. Because
exactly.
that's when Carp's basically saying, guys, they're gonna join, but we gotta give them our Palantir magic, and then there's gonna be one quarter in a year, maybe a year and a half, where it's like 200 clients, because like that's how it would scale. That's what happened with Nvidia in a different sector, but ultimately that's what happened with
keep that in mind. We will get to net dollar retention and tie back. So everyone remember what we just talked about, but still, like, just quick comment: isn't half a year kind of crazy though?
No, I don't think so. I don't think it. When you're an enterprise that has a lot of money on the line with a lot of data, I feel like it takes time to make that decision.
Yeah, and he did comment. I mean, I assume that they have been quoted for like AIP, and we've been wondering, like, okay, what's AIP monetization gonna look like? Obviously, they're gonna charge a lot for AIP, because if we look at the guy's comment, he explicitly wrote, "Damn, they are expensive." So it seems like Papa Carp does have some sort of monetization strategy in mind, after all.
But this
So
is
we'll
this is what
see when that
Spotify
starts
did.
hitting.
Spotify, the only Swedish company that actually produced anything valuable. Shout out to Amir.
IKEA.
What do you
I
say?
don't know. IKEA. I don't
Oh
know.
yeah, IKEA.
There are a few, man.
But I remember buying Spotify for $5 a month in college with a Hulu subscription. I got both of them for $5 a month. Now they ended up not keeping me because I went into YouTube Music, but like the amount of millions of people they kept just by giving them $5 a month. They showed losses to the street year after year after year. Now Spotify is a $50 billion company, stocks up almost 10x or something because they ended up keeping those users. I think if Palantir takes this approach to B2B SaaS, I am more than happy with them tanking 50% and just waiting for these users to come.
Guys, a little bit of what's your perception into reading this comment? Still from the same guy that commented. Like it has, like AAP has certainly demonstrated to people that AI is more than just a chatbot, and that you can embed LLMs as digital reasoning in the back end of workflows and automation. The value proposition is clear, but damn, they are expensive. Do you think these, damn, they are expensive, should be considered a plus or a potential problem for the scale?
I think it's a plus. Like we just mentioned, that they went from no strategy to obviously now having a strategy for pricing AIP, because when you can really prove the value. I mean, we've had. Do you remember when there was an outrage when this Korean guy asked Carp on stage, like, "Why are you so expensive?" Like, do you remember that?
Yeah.
It was like outrage. Well, he's like, "Well, if I make it this much money," like, we come back to this, like, okay, do you care if you're paying 5 billion per year for a software if that software makes you 10 billion? Like, if you can increase efficiency, if you can really show the value, then like the actual price tag isn't too relevant.
I agree.
When you just look at like what you're getting out of it, like it will still be worth the proposition, like will still be worth the investment. But I'm happy to see it. So to answer your question, yes, I think it's positive, going from having no clue what they're going to do with AIP. I mean, the notion was we're going for the whole market, and that's what they've been doing, because to date we haven't really seen AIP monetization show up in the numbers meaningfully, at least. And now when we actually have some comments that, well, they are actually pricing it pretty steeply, I think that's positive, especially because we know from customers themselves that AIP is really changing how they operate their business. So I think it's justified and a net positive for sure, in my opinion.
Okay, I could be wrong. My thought is being expensive was very like a real problem when the solution was not very scalable, like when you needed a lot of human work, and when Palantir Foundry was essentially a monolith. But if it is expensive, but you can easily, rapidly see value unlocked, if in these 5 months you can literally show, okay, look, we save you 50 million, then you could seriously think, okay, let's start the next year with like a 15 million contract. Imagine this at scale. If there are like many customers exactly in this situation, there could be like a potential bump in the next quarters.
Matt, any final thoughts on, is it worth paying? I mean, you work at a company that uses Palantir. Is it worth paying for, even if it's expensive?
I think so. I think the thing that people may forget is generally the reason why Palantir gets sold within an organization is the first use case. And I think what people don't necessarily recognize is the follow-on cases in the infiltration within the organization, the net dollar retention piece, the ability to continue that longevity. And I think a lot of people don't recognize that, at least from my perspective, and it seems like from what I've seen from Foundry cons as well as AIP cons, they have the same sort of perspective, at least from my point of view. Once you kind of build this into your daily operating systems and your daily way of working, it's going to be very sticky and very hard to move off of it. And you, generally speaking, hear very few people, once you actually start using the software, to deviate from it. Of course, there's been cases where there's been, uncovering of corruption and things of the like within the organization. They said, oh, these guys, they can get too much, right? And I've seen that. And, I'm not going to name any specific companies, not my company. So don't go digging there. But I think what it might be for a lot of people is the sticker shock. And eventually, and Karp said this very early on, I haven't heard him say it in a little bit, is people will say, no, not yet. But then in 18, 24, maybe 36 months, they're knocking on the door again to say, you guys are right, we'll pay. Right. And I think that there's still probably a laundry list of folks out there that will do that. And we have yet to see that. You have to think, if these companies are willing to pay the amount of money that they're paying for cloud services, right? Why wouldn't they be willing to basically ontologize and literally get all that data that's on the cloud working, right? When you think about cloud, that's it's compute, it's a little bit of, with respect to storage, you're talking about hundreds of billions of dollars a year, but yet we're at 2.75 billion for fiscal year 2024 for Palantir. This is very early. And in my opinion, if you're going to be able to monetize all that data, this is going to be something that hopefully gets into the 40, 50, maybe even larger $1 billion range down the road. So we're hopefully talking about a 10 to 20x of revenue compared to where we are today. So to me, very early in its infancy. Anything that anybody says against it is a sticker shock, and eventually they'll come knocking on the door.
Mm-hmm. Well,
yeah, we got Code Strap right here. Says the actual compute costs are expensive on paper, but not when you apply activities-based costing. The more important part of that thread is the investment in upskilling and widespread adoption. So I think it's 100% correct.
Well, it's the same thing reasoning. When you purchase a good computer, it is expensive. But what if with that computer you can unlock a lot more value, a lot of productivity? It is expensive, but the value that you are getting, if that far exceeds the cost, you can say that is not worth it.
Yeah. All right, next one.
Here's the crazy one I wanted to talk about. I think Palantir has been pretty, conservative in their guidance for everything but this one, which is adjusted free cash flow. And it is kind of crazy. They expect on the high end $1 billion in free cash flow for the whole fiscal year. However, we're only up to 300 million after 2 quarters, which means that we have 700 million to go.
Well, they don't expect $1 billion. They expect 850 million to $1 billion. So
yeah, so
the low
this
end,
is the high end. So
okay,
1 billion.
Gotcha.
So typically Palantir tends to, when they give a range, it's more or less always on the high end.
Yeah,
and typically we don't get 20% discrepancy between the low and the high end. Typically they give us like 2 million like difference. Like it's been really, really granular, especially in the revenue. Like we expect 1.25 billion to 1.253 billion. Like it's something like ridiculous historically, right? But this one, they have quite a range, and any way you cut it, this quarter or at least the next one, should produce some very, very exciting free cash flow and free cash flow margins. So I've gone with something like 300, 400, like if we split Q3 and Q4, but that's still like 41% free cash flow margins, which is like roughly double the prior quarter. I mean, do you guys have any comments on this? I just think this is kind of nuts.
This is the most confusing metric because I try, and you can kind of grow like you based off your trend line. I'll go the other way because I'm reversed, but based off you can kind of see a trend line going up and to the right, obviously. But you saw that spike of 50% last year, and then it came back down. So I'm like very curious, really. Like I said, I mean, you can establish kind of from the middle of 2022 to now kind of an upward and to the right trend. But like you said, the lumpiness is something that is very confusing to me. My hope is that you settle off eventually in the 35 to 40% range on a very consistent basis, and maybe even grow it to the 50% range. But that's kind of like a medium thing. The thing that I don't understand necessarily right now is the lumpiness. But This one I struggle with a little bit. So keep in mind, when people are talking about cash flow from operations, they're removing the net interest income. So just for anybody that's out there that's listening, so this is strictly revenue coming from the company and actual like cost of goods removed and things of the like. So that's basically what we're talking about here. We're not talking about the interest that's coming from it. So why it's so lumpy is what's confusing to me.
I have a question.
30 to 35%, and I'll leave it there. I don't know if we'll get to 40, but I know that would mean that we're likely to underperform. Sorry, go ahead, Amit.
But my question to you, Matt, is if our adjusted operating margins go up, that money is what helps our free cash flow, right? Like that's how it works?
Yes.
Sorry, repeat the question.
If the adjusted operating margins go up, which they've been going up dramatically over the past 3 quarters, that is what helps free cash flow at the end of the day, because that's cash from
Yes,
the business itself.
Yeah,
yes,
it does,
but
not necessarily.
we mentioned it a couple of times already, but I think is always useful to underscore that. Like when you write the number of the operating income in the income statement, what you do is what is the value that has been generated in the quarter, and you assign a value to that quarter. When you look at cash flow, that's why it is in another financial statement, you look at, okay, what is the actual money that has been received by the company? Right. So that could be this disconnect between the operating margin, which tries to get a picture every quarter of what is the value on paper that has been generated, and then the free cash flow, which is, okay, what is the money exchange between Palantir and the clients? So when you have the discrepancy between these two, for instance, you have a spike in free cash flow, it means that Palantir started receiving a lot of money from customers that maybe are customers that don't pay monthly, they pay annually. Or maybe there are some early renewals. So you were expecting to pay every quarter for 3 years. But at the end of Q3, you decide, you know what? I'm satisfied with Palantir. I want to expand my usage. And now I want to have many more licenses. I want to have much more use cases unlock. But you know what? And Palantir says, well, great. We can get you a deal if you are paying us upfront and we make a big contracts for 5 years. What
well,
would
the
happen?
reason I ask is if operating margins are going up, I mean, I think they're going to be close to 40%. Maybe that's why Amir, they're so confident on this $1 billion free cash flow number as well. Maybe there's some correlation between them thinking that.
Think of this way. What happens if you have a massive contract? Now you have let's come this way. I come to you and I give you $100 million contract. Okay, the free cash flow you get in this quarter is 100 because I pay you upfront everything. Now you have a massive spike in free cash flow. What is the revenue recorded? The revenue recorded is these 100 million divided by the quarters. So each quarter you collect, you write down as the value generated a fraction of that contract, which gradually compounding everything, it reaches 100 million. So what you see is a spike in free cash flow, but the operating income that gradually builds up, and the two things must converge. So that's the relationship. So you are right in saying if the operating income is still very high, the free cash flow will have ups and downs, but will converge to that number.
Amir?
Yeah, it could also be the opposite, that it's not recorded until a later period as well. But so yeah, that's what makes it. That's why I think Arnie doesn't really track free cash flow so much for Palantir. I think he prefers to track the operating income as a proxy instead, which I can see that it makes sense. But to Matt's point, I think we talked about it a short while here. Why we see these spikes. And it's really a lot about when the revenue is recognized as cash, as we've been talking about. And historically, that used to be towards the end of the year. Like the contractual obligations to actually pay was situated towards the end of the year. But I mean, there's no real consistency in that either. So I think it's much more spread out, and we can just take bump whenever, more or less. So I think tracking it quarterly doesn't make much sense. Annually, when you it doesn't really matter which quarter. I think that solves a lot of the lumpiness that you see or perceive when you look at the quarterlies. So I think annually it makes sense to look at free cash flow. Otherwise, a better proxy is probably operating income. And yeah, I still believe like 1 billion is pretty lofty. I don't know how that spread is going to be. I guess at least 300 million by this quarter, which would mean something like 41% margins or more.
Which would be amazing.
Yeah, it's crazy.
Do you realize like the difference between saying 800 million or 1 billion in free cash flow is like the difference between saying a 30% free cash flow, which is great, to 37%, which is wow, that's insanity. Like
that's why when I saw that range on the deck a couple of quarters ago, I was pretty surprised too.
Yeah, but look, neither Palantir really knows, because what happens if at the end of Q4 you have a big client like Exxon saying, you know what, now I give you this $100 million contract and I pay you like 30% of the contract right now. Like that's something that you can't really predict. But I think personally, like if it is true that the free cash flow goes up and down, but must converge to the operating income, I think the core discussion that we should have is now the operating income adjusted, so before the stock-based compensation, after the stock-based compensation, there is impact is like 37%, which is already very, very high. Yeah. But it was 30%. It was even lower before. What's the direction of this stuff? Because yes, we are focusing on the revenue growth, which is great. But what completely analysts missed was like the bottom line exploding. So the big question that we should ask ourselves as investors is we should expect these margins to stay more or less here, or we should expect that in 1 year from now, we would even see something like 50% free cash flow, because that completely changed the numbers. And I want to know your thoughts about it.
Let's get in. I just want to answer that Palantir does have some visibility into it, because they do give us the remaining performance obligations, both on a current basis, meaning within 12 months, and what's non-current. They also know how much remaining deal value it is, which also accounts for options that aren't necessarily going to be recognized. So, I mean, they do have a lot of input into how they project free cash flow, because they do know how the contract setups are. They do know what the deal flow looks like. So this is as of Q2. I mean, they do have a lot of data, but it makes sense. As you mentioned, you could have this bombshell drop of of an expansion, and that's why we get the range. But I still wonder, how can they be so confident in the revenue guidance historically, where they have like 2-3 million as the discrepancy, but here it's like 20%. I mean, yeah. Anyway, I think we shouldn't get stuck on this one. I just thought that it was very interesting that we get such a wide range. It's atypical of Palantir. And we should see some pretty strong free cash flow margins the remaining 2 quarters, especially considering the static nature of Q1 and Q2, when we have 700 million roughly to go, according to their own estimates. Could even exceed that, but let's see. And this is the final one I have today, which is net dollar retention. And we've been talking about it on and off. All the conversations more or less tie back into the net dollar retention, and when are we going to recognize all those initial AIP customers? How many months of free trial do they get before we actually start to charge them? And I think now, if we consider that AIP launched at the end of Q1, start of Q2 of 23, I mean, we have a year and a half roughly. So the first half year, 6 months of the launch of AIP, they should start to trickle in here. Like, even if they had like 6 months of free trial, like the example that Arnie showed, they should start to appear here a bit. So I would be really disappointed unless we see like a large increase in net dollar retention. Something like at least 118% is what I would like to see here.
Can I ask a question? Where do you think is a good sweet spot? Because, I don't think we're going to get to 150%, but
oh no, that
I mean, I could see us getting into like the 120s. Maybe in some quarters, maybe get to 125. You see some massive renewals, whether it's Warp Speed starts to really monetize, or whether it's AIP. You have a lot of renewals that just come through, and people start to sign up and actually start to get AIP monetized. But I guess my question is where's the terminal rate for that? And I don't necessarily disagree with the 118. I haven't really put much thought into it, but I am pleased by the fact that it has turned around over the past, I guess, 6 to 8 quarters. I just am curious more about where you think the terminal rate is on that.
A terminal will be very difficult, but as we are still early, at least the coming periods, if we can get to that 120 rate, as you mentioned, I think that would really show off our true high quality business with a lot of offerings and scalability. So we know that AIP is obviously on everyone's mind. We don't know what Warp Speed will do for the business, and we also know that they're probably not satisfied just sitting on those 2 products. I mean, we know that they're constantly looking at developing more and more solutions, platforms, solving more and more issues. So for a company like Palantir, I think 120-ish should be sustainable, especially if we consider that more or less clients are being onboarded like more or less for free. So that really
also, we had a ton of extensions this quarter, right?
Yeah, I mean, if we just look like we get this metric. I'm just gonna. Can you share my screen? I'm gonna find it. So one thing that we can track is even the largest customers, the top 20 customers of. I have it here. I don't have the growth rate. Or whatever. I'm not going to calculate it, but if we look at the top 20 customers and how quickly they have been growing, and these are like the top 20, like they are already major clients, they've still been growing at like 15 to 20% for like years. So that really shows that scalability of Palantir solutions is really up there, and especially with the strategy that they're going with getting in, taking over the market more or less for free, and then just scaling up within the business over time. 120 as a baseline, at least for the coming periods, would be very strong, and I would be very satisfied with that. Something like 13, 14, 10%, like we were down at 7%. I mean, that was really concerning for a while there.
Yeah, 107.
Yeah, that was really concerning. So it's getting healthy, as you mentioned. The most important thing is that the trend is reversing, because that's showing that we are actually scaling the current customers. 118%, I would be satisfied. 120, that would be like terrific. I think it might be a bit too early for 120, as we only have that really like half a year worth of AIP additions. I think in a half a year from now, that's when we can probably start seeing 120 if we just look at the AIP dynamic. And then a year from that, we should start to get the warp speed and whatever else dynamic to come into effect. But yeah.
I mean, I just think about that number, right? I mean, if you think about, I mean, granted, not all the new customers are included in that revenue number, and also the NDR. So you kind of have to take the statement with a grain of salt. But my thought process is like, if you're getting 18% growth in revenue from your existing client base on an annual basis, think about how easy that makes the future revenue growth of just in general. And then two, to me, that means think of how cheaply or how low of a dollar amount we're probably giving away the product just to get into people's hands. And to me, that's okay, right? To me, I'd rather get more in now that we're profitable. This is me thinking 15 years down the road, right? Now that we're profitable as an organization, now that we don't necessarily have to worry about people being concerned, we're in the S&P 500, so that worry about, is this operating system suddenly going to be defunct and we have to switch out, that is out of people's minds now, hopefully, with the $4 billion on the balance sheet and everything the like. My hope is that they just give this thing away to as many people as they can for $1, just so they could have a contract with it. And eventually you get them trapped into this cycle of, 20% every single year, just boom, boom, boom. And as you give it to them for cheap, they find further use cases within their organization, and they end up becoming dependent upon you. And you grow with the organization, you grow that partnership, and you grow that relationship. And the hope for me is you literally take over the entire market. And that's where I hope that the company is focusing. And, if in future investor days, I would love to ask that particular question, like how focused are we on actually getting it into people's hands rather than getting dollars through the door? Because for me, I'm not necessarily caring about what the stock price is next year, 2 years, 3 years down the road. I'm caring about where the company is going to grow to. Where are we going to end up? Are we going to end up at $20 billion in revenue, 30? Right? That's kind of where I'm trying to understand. I'm trying to understand in terms of where Palantir is. We've hit $1 billion in market cap. Are we going to go to $500 billion? Are we going to go to $1 trillion? And I'm trying to really just understand the runway that this thing has, because it's so new. It's not like it's cloud where everybody's growing at 20 or so % per annum. This is completely different, and it's hard to gauge because I know for a fact that we're giving away some of the software for free. And I know people in the chat are probably like, what do you mean? And it's like, to me, I'm okay with that. I knew that was kind of the case coming in. Not everybody's being charged for the software. So I guess I'm just kind of trying to understand. Anyway, going back to your statement about NDR, it just is interesting to see that we're at 30% or so, or closing in on 30% with 118% NDR. It just makes me feel like we're underselling the products just to get into people's hands.
Well, with a little bit of context, in the past quarters, the growth coming from new clients contributed for like around 7-10% of the total growth. So also last quarter, when we got like 27%, well, the contribution from new clients was more or less like 10%, which is a relative peak. So give me a second while I'm searching. I'm navigating through my charts. Okay, here, sharing the screen. So this is like a broader view of how the revenues is generated. We have this black line, which is like the total growth, which is 27% last quarter. But this revenue growth comes from existing customers as of last year and the new customers that entered the numbers in this last year. And we saw that the contribution from new clients has been growing a lot after AAP and contributed like 14% of the 27% of the total growth. While the net dollar retention, this gray line, has been trending down, but now is approaching, like is going upwards again, as Emir showed. The big challenge now is, will the net dollar retention arrive a little bit higher like here? Because if we want to sustain a 30% growth, ideally we should want to have the new clients contributing for like, let's say 13% as of last quarter, but together you need to have a net dollar retention contributing for much more than just 113%. It should converge to 20%. And what we would ideally want is having a net dollar retention that needs to converge potentially to 130. But why 130? Because that's the comparison that SaaS investors would look at. Sharing the screen, but for another stuff. Like if we agree that Snowflake is no shit, but the net retention of Snowflake keeps being much higher, we should remember that Snowflake has a net retention that is trending down, which is very negative, but is still very strong. 127%, which means that the existing customers tend to use the platform to charge, like to be charged by Snowflake 27% more on average.
What's the just quickly for people who aren't familiar with Snowflake like myself, what's the upsell for existing clients? Like we can talk about Palantir and AIP and whatever, but what's the case for Snowflake? How do they achieve 30% retention rate?
Snow cones.
Well, that's mainly driven by clients putting more and more data on the.
Oh, okay. So like as they expand the database, they need to charge. Pay more for this.
Like what they really try to do is we start charging you from putting your data into the cloud, and when you use the data, you take them out of the cloud. We charge you again, but we also try to sell you like all the ancillary analytics and stuff to get the best of your data. But the core is when you drop the data there in the warehouse and you take it down. So you see that, like that's the reasoning. If with such a dumb product you can achieve these numbers, how much potential there is for Palantir, which can monetize both from like the real platform that unlocks value, but also with a similar logic of consumption on the ontology. Like there was a slide last year where they showed that you could pay for the ontology as a consumption. So imagine, I think that's the like the best way we can think of Palantir monetizing. I don't know how spread this is, but if I think how Palantir can align perfectly with its clients, it would be like, okay, the more you build your ontology, the more you use this ontology, the more we charge you, because having like a very good ontology is like the premise to unlock a lot of value. So imagine how big the ontology of a BP could be, and imagine that if ontology becomes like bigger and bigger, performs better, you have all the users keep building on top of it. If Palantir gets a percentage of that, automatically it gets a percentage of value. But if it is also true that Palantir has this platform that can solve a narrow problem, but potentially disrupt completely your company, I would hope to see this net dollar retention converging at least to the Snowflake revenue. Obviously.
Okay, and this on Monday, what are you expecting?
More
to the point.
Well, more the 16th, 17th. potential. Like I think there will be
Just
a
slow.
spike, but for how the net retention is actually calculated. So
Yeah, I don't think we're getting
because
125 to 130% this
I
quarter.
don't want
No,
to annoy you.
no way.
No,
Just-
look, it is not to be taken out of the equation. I don't want to bore you like too much with the math, but how the net retention is calculated. You take the number of clients that you had at the beginning of last year. So we move back 1 year ago. You check, okay, who are the clients? And we had like 300 something clients. Okay, and now in Q3 as of today, you check, okay, those 300 customers that generated X 1 year ago, how much they are generating now? The same 300 clients. And you see the difference between the two. That is the net retention. Okay, cool. But what is the implication of this? It means that all the new customers that have been added in Q4, Q1, Q2, like now, they don't enter the net retention. So all the new contribution from new clients didn't enter the net retention now, but they will enter in the quarter. So this will be like the first quarter, the next the first quarters, where we start incorporating the new AAP bootcamps clients into the net retention. So that's why I expect a spike. I'm not sure if this will be like the big spike, but the net retention mathematically should increase now by a good amount.
Yeah, and let's not
Okay,
get
final
stuck.
thing on this, Amir, and then we got to end it out. So go ahead.
Yeah, let's not get stuck. But I mean, there are so many dynamics into the future. Like we've obviously focused on AIP, warp speed right now. But imagine with the ever-growing developer community, the marketplace, when you can just start to get that service revenue more or less for doing nothing and just letting the developer community sell to each other and stuff. But yeah, let's not dwell.
Yeah,
too
let's
deep.
end it out on this question, because we have spent the majority of the episode being, I wouldn't say bearish, but a bit more conservative with our assumptions. Here's the final question. What if it's an NVIDIA quarter? What if it's 40% growth, guiding for higher than $1 billion in free cash flow, adjusted operating margins are above 41%. They're guiding for close to $1 billion in Q4 of revenue. I mean, like, is there any world in which probability-wise, what do you, where do you think that could happen?
Would be no words. We would just need all to get a cowbell and just ring.
I mean, if that happens, I think we're going to 55 and it's GG. It's over. Like, if we get 40% revenue growth, I mean, this is the only software play in AI that the street actually thinks is legit. It's cheaper than all the Max 7, not on an actual price sales PE, but just in terms of like pure market cap, which is not the best metric, but people won't care because they think it's going to $1 trillion. And then you're going to have Carp banging on the table in a positive way. And if the numbers back up his banging, like more than back up 40, 45% growth, which again is that dream quarter in Q3, and this is the inflection point. I mean, who knows how this ends out?
The big question is, does Palantir right now deserves $50? I would say potentially based on the expectations. The bigger question is, will Palantir deserve $50 after the earnings? That is really why the numbers, but more importantly, like the confidence into the future that Carp can share, really matters.
Matt, you think it could be an NVIDIA quarter in Q3?
Not yet.
Okay, that's fair.
When?
Amir?
Sorry.
No, that's
exactly.
fair.
I don't know.
That's
That
what most of us
converges
think.
to when Lambo.
Yeah.
I'm hoping for at this point, Lambo's in the bag. I'm just, I decided to forego, and we're waiting for when
He's
Island.
gonna buy a rocket instead of a Lambo. He doesn't need a Lambo anymore.
Yeah, that'd be pretty dope. Sending a rocket. Yeah.
First of all, I don't think we have been bearish today. I think most of our consensus has been like in line with like, yeah, they're steadily growing, getting more efficient, increasing revenue. I mean, 30%, it's not bearish. I mean,
Yeah.
a lot of stuff we talked about was not bearish at all. But I mean, 40, 45, I mean, if I was to assign a probability to that, it would be low single digits. I mean, I don't see a way. I would be the first one to ring the cowbell, and no one would be happier than me if we manage that. I mean, I don't see a way.
Guys,
Really.
do you think Rishi will update the?
Oh yeah, can we talk
$9
about that real quick to
target?
end out? So we got a $9 price target by our boy Rishi.
I
again.
got the
I hope. I can only
price
hope.
targets. Let's.
I mean, that was pretty flabbergasting to see him keep that target.
Here we have our boy at 9.
Guys, sorry to interrupt,
Continued.
but can we give like 1 second of appreciation for Emir, who doesn't take screenshots from Bloomberg? Like he needs to recreate a Bloomberg screenshot in Excel.
Wait, hold on. This is not a screenshot from Bloomberg?
No,
You recreated the screen?
Jesus Christ. dude.
Holy crap, bro. Arnie just exposed the shit. out
I'll
of
see you guys later. This is some bullshit.
This is- This is.
I thought that was legit, bro.
I
Dude, I thought you had the terminal or you had a friend who had the screenshots or something.
No. It's you know, when we did the weekly, like when you weren't here, I recreated the stock chart in Excel as well, and Arnie was like, "What the f is this shit?" You know, it's like, what's wrong with you? And I made the whole stock chart in Excel as well. But yeah,
I mean, I was thinking, man, I was like, these Bloomberg terminals aren't cheap. Like, I didn't know this guy was balling like that. And
no.
man.
I just thought you had screenshots from someone. I was like, okay, you got the screenshot. Like that's all right.
no, it's Excel.
I love this, dude. I love this so much.
These two of highlight Ives. Imagine Dan Ives is less bullish than a Wall Street analyst in a stock. Like he will have to correct this 45 to be above Mariana, even like marginally. But yeah, I mean, Street is still like they still expect the stock to sell off significantly. Rishi, our boy, at $9, he keeps with his conviction. I would love to read that equity research report that RBC Capital puts up. Like,
I'll try to find a way to get it.
What's in there? Yeah, I just want to read what's in that equity research report. What is he seeing to say that? Yeah, $9 fair and square. I mean, I don't know. I can't.
Damn Canadians, man, they always hate Palantir. I don't know what it is. They sell it early. You know, they give bad price targets. I'm curious. I actually Fidelity puts out a research. You guys continue. I'm gonna pull it up.
No, we're done. We're done. We're for sure
okay.
done. But
Aren't you surprised that the Knives has been relatively quiet?
no,
Look, this is the first time that two things happen. Like a stock reaches like a very big high target the Knives put. Like I've personally never seen that. Typically, like prices converge to the direction the Knives hints, but it's the first time I see the stock like literally reaching that. And Mariana has a higher target than him. So I personally expect like the Knives comes out like with like 100. We'll see.
I think Dan Ives being silent here means he's waiting for the results as well. And if we tank 20%, I think he'll just maintain his target. But if we outperform, maybe he raises it. But I think he even knows, okay, I had a target, they reached it. Now let me just relax until I raise it again.
I have a quick yes/no question before we end it off. Just quick yes/no to the people. Are we going to see an additional analyst to Dan Ives and Mariana on the call? Let's go around there.
I would say no. No. But if I disappear during the stream for 10 minutes.
Damn!
Dang,
Look at you.
No, I'm kidding. There's no way. I'm not gonna be there. But I don't think so, dude. I think they have a certain way they do earnings, and they're not gonna acquiesce to what. I mean, the stock's already up. Why do you need to if I was their team, I would be like, all right, why do we need this random suit from Jeffries who doesn't fucking understand anything about Palantir asking us these stupid questions, even though they're legit in the context of getting more diversity of ideas. When our stock's already gone up way past this target, like what is he going to do for us, right? So I think Dan Ives and Marian have got it right. They're going to keep those two there forever. It seems like.
Arnie? Yes, no. No.
I
And
say
I think
yes,
Matt.
just because I hope to have to see at least one.
Yeah, I'm praying.
I hope, I just hope we have some good questions, hopefully it's not like when dividend and small things like that, right? I hope that there's some really awe-inspiring things that can really give us an idea as to where the trajectory is going. I think Amir put it really well earlier. Like this could be a pivot point for the company in terms of reacceleration and things of the like. So I'd really like to hear more about where they think Warp Speed is going, what other potential things they have coming down the pipeline. Like, I would even love for them not even to just give us hints as to what they're working on, but hey, by year end 2026 or 2025, we plan on releasing another big operating system or something like that to kind of keep people like understanding that this is a company that continues to innovate. And these aren't the products that they're going to end with. They're always constantly evolving. All these people that work there are always focusing on things that they want to do. And with that, they're going to continue to figure out ways to innovate, create value, increase efficiency. As long as they continue to learn, these guys are geniuses at what they do, and really looking forward to seeing how the company continues to progress. The stock, I think, is just going to be a byproduct. I'd love it to go back down into the 20s, 30s, pick up more, but I can only do that if it does. I can't predict anything. So,
Guys, what I'm really surprised of. How many analysts are actually covering the stock right now? How many do you think?
Over 15?
Yeah, more or less that number. How many stock analysts cover Snowflake? Is 40.
30, 40? Yeah.
Wow.
So this
I
to
count
say,
16 here. Yeah.
I'm actually surprised how few analysts are joining to cover the stock. Like, especially now it entered the S&P 500. So I think regardless of how the quarter goes, we will see many new ratings from analysts, because you need to think also from the perspective of the bank. Now there is a high interest for Palantir, which means portfolio managers need to have like at least a discussion. Okay, should we add the Palantir in our portfolio? We should overexposed, underexposed compared with a benchmark, the S&P 500, which now has as Palantir. And from a bank perspective, that means fees from trading, from research. So you want to have an opinion. Now, I don't really know. Like, for instance, JP Morgan is not there yet. I don't know, maybe because it is a client, there is some conflict of interest. I have an idea. But just thinking of, okay, Goldman Sachs has a view, but it's not very loud. There are many banks out there that still don't have like a real opinion on Palantir. And at this point, it feels like inevitable they have an opinion. Like, imagine these banks can't not have an opinion on NVIDIA. And Palantir is getting into that direction in terms of reputation that is needed for the AI theme, which all asset managers need to have a discussion on.
And here's also the big problem, right? So we looked at Wall Street consensus in the beginning, just briefly, like that it's way off compared to what the stock price and stuff. Did you know that although there are 15, 16 analysts covering the stock, the one that provided estimates after 2026, so 2 years out, is only one single firm. So one single firm accounts for all the projections from 26 to 33. So when all these Wall Street bankers open their Bloomberg terminal and they see, oh, this Palantir growth is going to be so weak, it's just one firm and their estimates, even though there are 16 analysts. So as we get more coverage, we're going to get a better representation of what people are expecting from the company, and we will stop seeing this discrepancy between expected growth from analysts that is completely detached from what the business is doing and what the stock price is implying. And I mean, I think a lot of portfolio managers, when they're like, oh, this Palantir, yeah, I've seen them on TV, I've heard about them, AI, right? Let me check the terminal. And then there's like this completely nut job of a estimate for the coming 10 years, and you're like, nah, what's this crap? I'm not gonna buy this. And so but that's how it works. They just look at the estimates and make a decision. They're not like really looking too deep into it.
This seems a simplistic view of the world, but don't overestimate portfolio managers' capabilities, especially when they manage like a portfolio of 30, 40 stocks. They go literally on the Bloomberg terminal and they look at the estimates and they assume these estimates are more or less right. Therefore, they look at the price multiples and they see an insane big number. But what if, as we mentioned previously, all the estimates for 2025, 2026 going forward are completely wrong because they completely underestimate the direction of the business. As a reminder, like the business right now is growing in the 27%. Our expectation as investors is that we could sustain this pace or even converge and exceed 30%. And analysts are still stuck for 2025, 2026, and going forward to 20% growth. So that's potentially the biggest source of alpha that we get.
What's the DB? Who's the Deutsche Bank analyst, and what do they have it as? Let's see, they've had it as a sell for the entire year.
Deutsche Bank is Brad Zelnick at $21. So,
but we could argue the positive hint is that even the bear analyst, like the Jeffries, the Citibank, like this guy that we labeled as, okay, these tend to be like laggards and quite negative on the company, right now have a price target of 30.
Yeah, so they raised their targets, even though, like Mizuho on Monday said, hey, $30. We don't know why, but it's 30.
Yeah.
They
same with Citi and Jeffries. And they just keep DA Davidson, they just keep increasing to not be wrong, but they're not really going out on a limb and telling you something about the business. They're like, I don't know, but let's just increase because the stock price increased, So.
At least Rishi has conviction. Yeah. Because none of these other analysts, like only Mariana and Dan Ives are actually bullish. The other ones are just like, whatever, I guess we have to give it a rating. And then Rishi's just like bearish. And he's like, $9, I'm not changing. Now it's egotistical to not raise it even a little bit, but still. I think it's going to be a hell of a quarter.
Get us that report, Amit. The community is relying on you for that RBC Capital Rishi report.
Yeah, I'm going to try to find it. That would be very interesting to read.
Well, Karp was extremely confident in the latest interview. Sham, in the latest comments he dropped yesterday, he had like a very strong line at the end. I don't know if you capture it. Let me.
It was on the live stream, did it?
No, this was on Yahoo Finance.
Okay.
I think it was this one. And he made also a Fox interview.
Yeah, Sham's been going around with his new 18 theses for those who haven't read it.
Well, I'm not getting the point, but he literally said like AI demand is on the roof. And then he disclosed again the example of the 78 agents deployed with this insurance. I think this AI agent theme will be like the key narrative that the management will try to push on for a simple reason. Like you look at the earnings calls of the other companies, they all want AI agents somehow. So like ServiceNow is literally, ServiceNow, Salesforce, they're all trying, AI agents here, AI agents there, but at the end of the day, they are like augmented chatbots. They're not really like going back and forth unlocking big value. But simple observation, look at Google Trends. The number of searches for AI agents. Like this chart tells you, okay, what people are interested in, AI agents. Is there a company that can really show big value using AI agents at scale? Hey, Palantir. So if the management markets itself very well, we have a huge opportunity not only for the stock, but also to get like that amplification that Palantir is the way to go.
All right. That is it for us, folks. I think all of us will be live, maybe with a couple other guests as well on Monday, 3:30 p.m. Eastern. We'll start. It'll be a fun one. Whatever happens to the stock is whatever happens to the stock. One thing I can promise is that whether the stock goes up or down as a community, we'll go through it together, right? And that's the cool part about being in a community. Every community that has had a exponential stock has also dealt with major pullbacks. So we've had a great 2 months from basically 20 to 45. If we have a pullback, we'll deal with it. If we go up to 55, we'll have plenty of cowbells to celebrate. So
There you go.
we will see.
Be sure to
don't-
follow everyone. Curious, Amit, when are we starting the coverage for Election Day on Tuesday?
Oh yeah, so I'll be live with Matt on Election Day coverage. Also, Chris will be there. Maybe Steve. Maybe Carlos. Probably 6:30. Matt, I was thinking. You can come in whenever, but 6 p.m. we'll start.
Okay, so you'll do the close, and then you'll have a separate stream.
Yeah, and we'll go live until probably 6 a.m. Who the hell? Oh, we didn't even talk about that, dude. This is the day before the election, so
It's gonna be a
Numbers-
wild.
numbers could be
24 hours.
amazing, but then you never know, right?
But do we actually know who wins by Tuesday? Don't want to
If
need
it's
to
a
wait like 2
blowout,
weeks.
if it's a blowout, yes. If it's very contested, someone has to call the other person and concede. That's typically what happens, and I mean, until that happens.
So 2016, Hillary called and conceded,
Correct.
and then I think it was a couple days before we found out between Biden and
I don't
Trump,
think
right?
Trump
It was
ever
like-
called Biden.
I don't think he ever did. Yeah, I think it was like by Wednesday. I think it was at least 24 hours. It was like Wednesday night or Thursday afternoon by the time they were like, okay, we actually think Biden won this.
Yeah, I think the news networks are going to be very hesitant to call it as well in either section because they really want to get it right and not have any mismatches. But if it's super close, and to me, it's coming down to Pennsylvania at this point. It's going to take some time.
I mean, is it supposed to be close? I mean, if we look at the betting markets, I mean, it started to normalize like the past 2 days, but it's been like a blowout in terms of the percentages of what the markets expect, right?
The betting markets are fucking stupid, dude. Like, I mean, they kind of make sense. They kind of don't make sense. There's so many questions about the manipulation of them. Like, are people hedging now because they think Kamala's getting ready to win, which is why the gap is narrowing? I think it's a great product, the betting markets, but I think
Is there a convergence between the polls and the betting market in terms of percentage?
I don't know. I think this is the first election cycle we've had a real mainstream adopted betting market.
Yeah, I remember it being very scarce last time in 2020.
I read that tweet. Someone's like, we should be able to bet on if Palantir stock will beat or miss earnings. I'm like, yeah, short or buy the stock. What the fuck you mean?
Imagine on the betting market websites, they're like, bet on Palantir going up or down. It's like you could buy the stock, like that's also the.
I'm like, what? Yeah, it was crazy.
All right, that's it for us. Thank you, everybody. Everyone's Twitter and YouTube's in the description. We will see you 3:30 on Monday for Palantir's Q3 earnings. Bye, everyone.
Bye, everyone.
Have a good one.
Thank you.
Yo.
Have a good morning and day, you too.